And this applies to all your trading strategies, and even more so sometimes to like broken wing butterfly strategies, because what tends to happen in a simple bullish vertical is you can get a 200-point up move in the Russell with a simple bullish vertical, and then get a 200-point down move, and you're still up money or at break even if that happens. When you get into an adjustable broken wing butterfly strategy that starts off flat delta and perhaps draws down when the market actually goes up, if you're into that type of strategy and you're making upside adjustments and the market goes up 200 points and then it comes down 200 points, you're going to lose, okay? Because you're going to end up getting blown out to the downside on that strategy because you're trying to make more money as the market goes up. So two critical points here when you're comparing a broken wing butterfly and a bullish vertical, both strategies, right? Both a flat delta strategy and a bullish entry delta strategy both have the losing scenario that'll happen if the market goes down. It doesn't take it away. It kind of hides it from you on entry, but it doesn't take away that dynamic. So you want to be aware of that. And that being the case, it's even more important to notice this dynamic in a broken wing butterfly strategy as far as the market going down after you've entered and made up adjustments than it is in a vertical strategy.